Good evening, this is Giuseppe Basile. I'm the essentially you can find at the blog fibonaccistalker.com, fibonaccistalking.com or fibstalker.com. I also post regular launcher using that fibstalker nickname. Good evening, this is a brief review for my subscribers of the four markets I follow: the EURFX currency futures market, the dollar index futures, the USD versus Canadian dollar forex pair, and the S&P500 E-mini. Let's start from the daily chart of the EURFX currency futures contract. That's what you see on the screen. This is the continuous contract aligned to the September 2013 expiration. Those who follow me know that I'm actually looking at a lot of support here, and we will see whether this bounce that we had today on Monday will continue higher. In order to do that, it's important to watch a few levels that I'm going to show here. First of all, I want to again go with you. Again, I want to review the sequence of measure move lower on the 15 minutes chart. This is what you see on the screen, and we had one important anchor that was able to identify resistance in a different situation. The first time on the 19th, then again this anchor was able to identify this level of resistance, and price respected this level to the pip, and bringing price into this 131.25 level of target, and actually, so at the moment what I'm looking for a violation on the 4-hour charts that will be completed, confirming support above 132.38. On the 15-minute chart, we can see another sequence, and the anchor was this low here. It worked multiple times, so when that happens, this is what we look at, and that what program trading is looking at the moment. As we can see here, at the open of the euro-dollar market, the spot actually and the future, we saw this reaction lower at this 31.40. So to me, the sequence of 15 minutes will fail above 131.58, and this would be an initial confirmation of support here, but could actually bring price into this 132.05 resistance, and only in a violation, only price piercing the 132.38 level on the upside will confirm support. At the point we could buy at 132.38 with a stop below these lows that we see here, 130.65. May seem a huge risk, but price could then come back, and we could buy for our confirmation breakout. Moving to the dollar index, what you see is the daily chart, and technically this chart failed the sequence of measure move on the 4 hours. So apparently, and at this stage, it would seem that this level of resistance, the 81, starting at the 170 level here, is actually, this area of resistance is actually offering resistance to price. So we could see this price moving back, and that's not certain. Of course, we would just see this price moving higher, but if it moves lower, actually the first level of support will come at this 82.10 level, which is an extension. Moving to the US dollar versus the Canadian dollar, we had this huge move higher. We stepped in front of this freight train last week, and I have recorded a 1 unit of risk loss here, and it seems, as I'm going to show in a minute on the 15-minute chart, that the sequence of the measure move of the 15-minute on the 15-minute chart has actually failed, and that's an important indication. So we have been using this first anchor here, which showed us a support in 103.30 level, with the first target in 104 and the second target in 104.30, and this market kept moving higher very aggressively in extensions, as you can see on the 15 minutes chart, and the next trades in the sequence came at 104.30 area with a small front run, breaking price in 105.12 10 area, and not surprisingly, look at where the highs were printed. Program trading has been taking profit out at this second level, minus 61.8 level at the 105.50 level, and the next sequence in these moves in extensions higher failed, as we can see here, and this for me indicates the end or the suspension of this move higher, and we could see actually price now coming back into the 104.20 and actually even lower, slightly lower, before we will understand whether this market is ready to continue higher. It could go into the 103.90 before it continues higher if it does that. And so actually we could actually sell this market, and at the moment this 105.11 is showing a resistance, so it could be possible to sell this market here with a stop above highs and then take half out at 104.20 or 103.90. That would be the trading plan. And to close with the SP500, the SP500 continued lower, so there was no retracement in the morning. As we know, the SP500 likes to retrace a lot, so we still have to expect this full retracement into this 50-day moving average into the 1601. It was 1609 at the beginning of at the end of last week, and also still possible that we get a full retracement, so we need to protect our current position with a stop. It goes now above 1631. It was 1639, so actually we are bringing down this stop. We are actually locking in profits here. I hope this video is useful. I think the setups are quite clear from this video. If you want to receive this video, you can subscribe my newsletter. This video only goes to newsletter subscribers, and it's published after 2 weeks on my blog. And thank you very much, and have a great day, trading day and day tomorrow. Bye bye.